The World Bank Group is a family of 5 international organizations that make leveraged loans to poor countries. It is the largest and most famous development bank in the world and is an observer at the United Nations Development Group. The bank is based in Washington, D.C. and provided around $30 billion in loans and assistance to developing and transition countries in 2012. The bank's stated mission is to reduce poverty. The World Bank's activities are focused on developing countries, in fields such as human development, agriculture and rural development, environmental protection, infrastructure, large industrial construction projects, and governance. The IBRD and IDA provide loans at preferential rates to member countries, as well as grants to the poorest countries. Loans or grants for specific projects are often linked to wider policy changes in the sector or the country's economy as a whole. For example, a loan to improve coastal environmental management may be linked to development of new environmental institutions at national and local levels and the implementation of new regulations to limit pollution, or not, such as in the World Bank-financed constructions of paper mills along the Rio Uruguay in 2006. The World Bank has received various criticisms over the years and was tarnished by a scandal with the bank's then-president Paul Wolfowitz and his aide, Shahar Isa, in 2007. History, founding. The WBG came into formal existence on December 27, 1945 following international ratification of the Bretton Woods Agreements, which emerged from the United Nations Monetary and Financial Conference. It also provided the foundation of the Ojulanda Committee in 1951, responsible for the preparation and evaluation of the World Development Report. Commencing operations on June 25, 1946, it approved its first loan on May 9, 1947. Membership. All of the 193 UN members and Kosovo that are WBG members participate at a minimum in the IBRD. Most of them also participate in some of the other 4 organizations, IDA, IFC, MIGA, ICSID, WBG members by the number of organizations which they participate in, only in IBRD, San Marino, IBRD and one other organization, Suriname, Tuvalu, Brunei, IBRD and 2 other organizations, Antigua and Barbuda, Sao Tome and Principe, Namibia, Bhutan, Myanmar, Qatar, Marshall Islands, Kiribati, IBRD and 3 other organizations, India, Canada, Mexico, Belize, Jamaica, Dominican Republic, Venezuela, Brazil, Bolivia, Uruguay, Ecuador, Dominica, St. Vincent and the Grenadines, Cape Verde, Guinea-Bissau, Niger, Equatorial Guinea, Angola, South Africa, Comoros, Seychelles, Libya, Somalia, Ethiopia, Eritrea, Djibouti, Bahrain, Iran, Iraq, Malta, Montenegro, Bulgaria, Romania, Moldova, Poland, Russia, Lithuania, Belarus, Kyrgyzstan, Tajikistan, Turkmenistan, Thailand, Laos, Vietnam, Palay, Vanuatu, Samoa, Maldives, South Sudan, all 5 WBG organizations. The rest of the 127 WBG members, non-members are, Andorra, Cuba, Liechtenstein, Monaco, Nauru, North Korea. Organizational structure. Together with 4 affiliated agencies created between 1957 and 1988, the IBRD is part of the World Bank Group. The group's headquarters are in Washington, D.C. It is an international organization owned by member governments. Although it makes profits, these profits are used to support continued efforts in poverty reduction. Technically the World Bank is part of the United Nations system, but its governance structure is different. Each institution in the World Bank Group is owned by its member governments, which subscribe to its basic share capital, with votes proportional to shareholding. Membership gives certain voting rights that are the same for all countries, but there are also additional votes which depend on financial contributions to the organization. The President of the World Bank is nominated by the President of the United States and elected by the bank's Board of Governors. As of November 15, 2009, the United States held 16.4% of total votes, Japan 7.9%, Germany 4.5%, the United Kingdom 4.3%, and France 4.3%. As changes to the bank's charter require an 85% supermajority, the U.S. can block any major change in the bank's governing structure. World Bank Group agencies. The World Bank Group consists of the International Bank for Reconstruction and Development, established in 1945, which provides debt financing on the basis of sovereign guarantees. The International Finance Corporation, established in 1956, which provides various forms of financing without sovereign guarantees, primarily to the private sector. The International Development Association, established in 1960, which provides concessional financing, usually with sovereign guarantees. The International Center for Settlement of Investment Disputes, established in 1965, which works with governments to reduce investment risk. The Multilateral Investment Guarantee Agency, established in 1988, which provides insurance against certain types of risk, including political risk, primarily to the private sector. The term World Bank generally refers to just the IBRD and IDA, whereas the term World Bank Group or WBG is used to refer to all 5 institutions collectively. The World Bank Institute is the capacity development branch of the World Bank, providing learning and other capacity-building programs to member countries. The IBRD has 188 member governments, and the other institutions have between 140 and 176 members. The institutions of the World Bank Group are all run by a board of governors meeting once a year. Each member country appoints a governor, generally its Minister of Finance. On a daily basis, the World Bank Group is run by a board of 25 executive directors to whom the governors have delegated certain powers. Each director represents either one country, or a group of countries. Executive directors are appointed by their respective governments or the constituencies. The agencies of the World Bank are each governed by their articles of agreement that serve as the legal and institutional foundation for all of their work. The activities of the IFC and MIGA include investment in the private sector and providing insurance respectively. Presidency. Traditionally, the bank president has always been a U.S. citizen nominated by the President of the United States, the largest shareholder in the bank. The nominee is subject to confirmation by the Board of Governors, to serve for a 5-year, renewable term. Current President. On May 30, 2007, U.S. President George W. Bush nominated former Deputy Secretary of State Robert Zoellick to succeed Paul Wolfowitz as President of the World Bank Group. The executive directors unanimously approved Zoellick, effective July 1, 2007, as the 11th President of the bank for a 5-year term. Robert Zoellick is the former Deputy Secretary of the U.S. State Department and the former Chairman of Goldman Sachs Board of International Advisors. He graduated magna cum laude from Harvard Law School and Harvard Kennedy School and Phi Beta Kappa from Swarthmore College. Zoellick announced in October 2007 that his priorities for the World Bank included increasing efforts to reduce poverty in the world's poorest countries, increasing support for neglected Arab countries, increasing support for countries emerging from violent conflicts, addressing poverty in emerging economies like India and China, increasing emphasis on environmental issues, and improving access to treatments for HIV and malaria. During this same period, the bank unregistered trademark's failure to adequately consider social environmental factors was most evident in the 1976 Indonesian transmigration program. This project was funded after the establishment of the bank unregistered trademark SOESA office in 1971. According to the bank critic La Presta, Transmigration V was the largest resettlement program ever attempted. Designed ultimately to transfer, over a period of 20 years, 65 million of the national unregistered trademark's 165 million inhabitants from the overcrowded islands of Java, Bali, Madura, and Lombok. The objectives were, relief of the economic and social problems of the inner islands, reduction of unemployment on Java, relocation of manpower to the outer islands, and to strengthen national unity through ethnic integration, and improve the living standard of the poorer Putting aside the political aspects of such a project, It otherwise failed as the new settlements went out of control. Local populations fought with the migrators and the tropical forest was devastated. Also, A.S. settlements were established in inhospitable sites, and failures were common. These concerns were noted by the bank's environmental unit whose recommendations and analyses were ignored. Funding continued through 1987, despite the problems noted and despite the bank unregistered trademark S published stipulations concerning the treatment of groups to be resettled. More recent authors have pointed out that the World Bank learned from the mistakes of projects such as Transmigration V and greatly improved its social and environmental controls, especially during the 1990s. It has established a set of safeguard policies that set out wide-ranging basic criteria that projects must meet to be acceptable. The policies are demanding, and as Malaby observes, because of the combined pressures from northern NGOs and shareholders, the bank's project managers labor under safeguard rules covering 10 sensitive issues. No other development lender is hamstrung in this way. The 10 policies cover environmental assessment, natural habitats, forests, pest management, cultural property, involuntary resettlement, indigenous peoples, safety of dams, disputed areas, and international waterways. On April 16, 2012, President Barack Obama announced that Jim Yong Kim would be the next president of the World Bank Group. Kim assumed office on July 1, 2012. Independent Evaluation Group. The Independent Evaluation Group plays an important check and balance role in the World Bank. Similar in its role to the U.S. government's Government Accountability Office, it is an independent unit of the World Bank that reports evaluation findings directly to the bank's Board of Executive Directors. Caroline Heidler is the Director General, Evaluation, whose evaluations provide an objective basis for assessing the results of the bank's work, and ensuring accountability of World Bank management to the member countries in the achievement of its objectives. Extractive Industries Review. After long-standing criticisms from civil society of the bank's involvement in the oil, gas, and mining sectors, the World Bank in July 2001 launched an independent review called the Extractive Industries Review. The review was headed by an eminent person, Dr. Emil Salim. Dr. Salim held consultations with a wide range of stakeholders in 2002 and 2003. The EIR recommendations were published in January 2004 in a final report entitled Striking a Better Balance. The report concluded that fossil fuel and mining projects do not alleviate poverty, and recommended that World Bank involvement with these sectors be phased out by 2008 to be replaced by investment in renewable energy and clean energy. The World Bank published its management response to the EIR in September 2004. Following extensive discussions with the Board of Directors, the management response did not accept many of the EIR report's conclusions. However, the EIR served to alter the World Bank's policies on oil, gas and mining in important ways, as has been documented by the World Bank in a recent follow-up report. One area of particular controversy concerned the rights of indigenous peoples. Critics point out that the management response weakened a key recommendation that indigenous peoples and affected communities should have to provide consent for projects to proceed. Instead, there would be consultation. Following the EIR process, the World Bank issued a revised policy on indigenous peoples. Impact evaluations. In recent years there has been an increased focus on measuring results of World Bank development assistance through impact evaluations. An impact evaluation assesses the changes in the well-being of individuals that can be attributed to a particular project, program or policy. Impact evaluations demand a substantial amount of information, time and resources. Therefore, it is important to select carefully the public actions that will be evaluated. One of the important considerations that could govern the selection of interventions for impact evaluation is the potential of evaluation results for learning. In general, it is best to evaluate interventions that maximize the possibility of learning from current poverty reduction efforts and provide insights for mid-course correction, as necessary. Access to information. The World Bank policy on access to information sets forth a groundbreaking change in how the World Bank makes information available to the public. Now the public can get more information than ever before. Rio Euro information about projects under preparation, projects under implementation, analytic and advisory activities, and board proceedings. Over the past 15 years, the World Bank Euro unregistered trademark S policy on disclosing information has evolved gradually. Until now, the World Bank Euro unregistered trademark S approach has been to spell out what documents the World Bank discloses. The new World Bank policy on access to information effective July 1, 2010, is a pivotal shift in the World Bank Euro unregistered trademark S approach to making information available to the public. Under the new policy, the World Bank will disclose any information in its possession that is not on a list of exceptions. This policy positions the World Bank as a leader in transparency and accountability among international institutions. Criticism. The World Bank has long been criticized by a range of non-governmental organizations and academics, notably including its former chief economist Joseph Stiglitz, who is equally critical of the International Monetary Fund, the U.S. Treasury Department, and U.S. and other developed country trade negotiators. Critics argue that the so-called free market reform policies which the bank advocates in many cases in practice are often harmful to economic development if implemented badly too quickly, in the wrong sequence, or in very weak, uncompetitive economies. World Bank loan agreements can also force procurements of goods and services at uncompetitive, non-free market, prices. In Masters of Illusion, The World Bank and the Poverty of Nations, Catherine Caulfield argues that the assumptions and structure of the World Bank operation ultimately harms developing nations rather than promoting them. In terms of assumption, Caulfield first criticizes the highly homogenized and Western recipes of development held by the bank. To the World Bank, different nations and regions are indistinguishable, and ready to receive the uniform remedy of development. The danger of this assumption is that to attain even small portions of success, Western approaches to life are adopted and traditional economic structures and values are abandoned. A second assumption is that poor countries cannot modernize without money and advice from abroad. A number of intellectuals in developing countries have argued that the World Bank is deeply implicated in contemporary modes of donor and NGO-driven imperialism and that its intellectual contribution functions, primarily, to seek to blame the poor for their condition. Defenders of the World Bank contend that no country is forced to borrow its money. The bank provides both loans and grants. Even the loans are concessional since they are given to countries that have no access to international capital markets. Furthermore, the loans, both to poor and middle-income countries, are at below-market value interest rates. The World Bank argues that it can help development more through loans than grants, because money repaid on the loans can then be lent for other projects. Criticism was also expressed towards the IFC and MIGA in their way of evaluating the social and environmental impact of their projects. Critics state that even though IFC and MIGA have more of these standards than the World Bank, they mostly rely on private sector clients to monitor their implementation and miss an independent monitoring institution in this context. This is why an extensive review of the institution's implementation strategy of social and environmental standards is demanded. AIDS controversy. The World Bank is a major source of funding for combating AIDS in poor countries. In the past 6 years, it has committed about $2 billion through grants, loans and credits for programs to fight HIV/AIDS. Its critics, however, claim these financial expenditures to be insufficient. Allegations of corruption. The World Bank's Integrity Vice Presidency is charged with investigation of internal fraud and corruption, including complaint intake, investigation and investigation reports. Investments. The World Bank Group has also been criticized for investing in projects with human rights issues. The Compliance Advisor Ombudsman criticized a loan given to the palm oil company Dinant by the World Bank after the 2009 Honduran coup d'état copyright tat. There have been numerous killings of peasants in the region where Dinant was operating. Other controversial investments include loans for the Xixoy hydroelectric dam in Guatemala while it was under military dictatorship, and a loan to Gold Corp for the construction of the Marlin mine. List of presidents: Eugene Meyer, John J. McCloy, Eugenia Black, Sr., George D. Woods, Robert McNamara, Alden W. Clausen, Barbara Knobel, Louis T. Preston, James Wolfenson, Paul Wolfowitzes, Robert Zoellick, Jim Yong Kim. List of chief economists: Hollis B. Chenery, Ann Osborne Kruger, Stanley Fisher, Lawrence Summers, Michael Bruno, Joseph E. Stiglitz, Nicholas Stern, Francesca Bourguignon, Justin Yafulin, Martin Ravilian, Kaushik Basu. List of World Bank Directors General of Evaluation: Christopher Willoughby, successively Unit Chief, Division Chief, and Department Director for Operations Evaluation; Mervyn L. Weiner, First Director General, Operations Evaluation; Eve Ravani, Director General, Operations Evaluation; Robert Picciotto, Director General, Operations Evaluation; Gregory K. Ingram, Director General, Operations Evaluation; Vinod Thomas, Director General, Evaluation; Caroline Hyder, Director General, Evaluation. List of World Bank Board of Directors: Sarah Aviel, United States; Alistair Smith, Canada; Ireland, Guyana, Jamaica, Bahamas, Antigua and Barbuda, Belize, Barbados, Dominica, Grenada, St. Kitts and Nevis, St. Lucia, and St. Vincent and the Grenadines; Juan José Bravo Moises, Costa Rica, El Salvador, Guatemala, Honduras, Mexico, Nicaragua, Spain, Venezuela, Roberto Tan, Philippines, Colombia, Ecuador, Haiti, Dominican Republic, Suriname, Brazil, Copyright Zarguido Forcieri, Argentina, Chile, Peru, Bolivia, Paraguay, Uruguay, Zachi Santala, Iceland, Norway, Sweden, Finland, Denmark, Estonia, Latvia, Lithuania, Gwen Hines, United Kingdom, Ingrid Hoven, Germany, Herve de Villeroque, France, Gino Alzetta, Belgium, Luxembourg, Czech Republic, Austria, Slovak Republic, Hungary, Kosovo, Belarus, Turkey, Frank Skirk, Netherlands, Croatia, Bosnia and Herzegovina, Ukraine, Moldova, Romania, Montenegro, Macedonia, Bulgaria, Georgia, Armenia, Israel, Cyprus, Apollon, Albania, Greece, Italy, Malta, Portugal, San Marino, Timor-Leste, Omar Bagra, Algeria, Afghanistan, Ghana, Islamic Republic of Iran, Morocco, Pakistan, Tunisia, Agapito Mendes Diaz, Benin, Burkina Faso, Cameroon, Cape Verde, Central African Republic, Chad, Comoros, Democratic Republic of Congo, Carte-d'Ivoire, Djibouti, Equatorial Guinea, Gabon, Guinea, Guinea-Bissau, Madagascar, Mali, Mauritius, Niger, São Tomé and Príncipe, Senegal, Togo, Deni H. Kalalaya, Botswana, Burundi, Eritrea, Ethiopia, the Gambia, Kenya, Lesotho, Liberia, Malawi, Mozambique, Namibia, Rwanda, Seychelles, Sierra Leone, Somalia, South Sudan, Sudan, Swaziland, Tanzania, Uganda, Zambia, and Zimbabwe, Mansa Mutar, Angola, Nigeria, South Africa, Mirza Hussein, Bahrain, Arab Republic of Egypt, Jordan, Iraq, Kuwait, Lebanon, Libya, Maldives, Oman, Qatar, Syrian Arab Republic, United Arab Emirates, and Republic of Yemen, Jorgfrieden, Azerbaijan, Kazakhstan, Kyrgyz Republic, Poland, Serbia, Switzerland, Tajikistan, Turkmenistan, and Uzbekistan, Vadim Grishin, Russian Federation, Shiksin-chen, China, Mukesh Nandan Prasad, Bangladesh, Bhutan, India, and Sri Lanka, Sundara Annamalai, Brunei Darussalam, Fiji, Indonesia, Laofiopli Euro Unregistered Trademark S Democratic Republic, Malaysia, Myanmar, Nepal, Singapore, Thailand, Tonga, and Vietnam, Michael Wilcock, Australia, Cambodia, Kiribati, South Korea, Marshall Islands, Micronesia, Mongolia, New Zealand, Palau, Papua New Guinea, Samoa, Solomon Islands, Tuvalu and Vanuatu, Hideki Suzuki, Japan, Saudi Arabia's seat is currently vacant. References. External links, official World Bank Group website.